The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the July 3rd Independence Day edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone had a wonderful Wednesday. Let's make sure you and I, we do all that we can do to have a safe and happy July 4th celebration. I'll do everything I can during the next couple hours to teach how to master the tools for trading, and that includes the tools of the mind. Because when we master the tools of our mind, we begin to think like a strategist, and that's really important as it applies to every aspect of our life, especially trading. You know, some of the tactics that we use in technical analysis are A to B equals CD patterns, Fibonacci expansions, and retracements. They help to form the Gartley and butterfly patterns, and of course, Japanese candlesticks. Because these are the signs that the bulls and the bears make for you and I each and every trading session. And unlike many traders who focus only on tactics, you and I know that to really achieve our goals, to really achieve our dreams, we've got to always think like a strategist. So today and every day, let's do all that we can do to think like a strategist, because strategists, they simply slay the tactician all day long. And let's take a moment. Let's review one of our tools, a tool that helps us to lead an inspired life. The tool I call declaring our independence. You know, our 4th of July celebration is rooted in history. It's recorded that shortly after the Declaration of Independence was signed in Philadelphia, celebrations took place throughout the land, and former colonists were just starting to call themselves Americans. Yes, you and I, we celebrate with fireworks, picnics, fun, and festivities, but imagine what it must have been like in Independence Hall when 56 men came together to sign that parchment, the Declaration of Independence. We must realize that these men pledged their lives, their fortunes, and their sacred honor. And each man knew the penalty for high treason to the crown. Benjamin Franklin, he's quoted as saying this. He said, "We must all hang together, or assuredly we will all hang separately." And John Hancock, he wrote his signature so large, he wanted to make sure that King George could see it without his spectacles. Yes, these were brave men, and they stayed brave throughout all the bloodshed of the coming years. You see, their courage formed a nation built on a universal claim to human dignity, on the proposition that every man, every woman, and every child has the right to a future of freedom. Independence Day, in my opinion, is about these words. These words, folks, we hold these truths to be self-evident, that all men are created equal, that they are endowed by their Creator with certain unalienable rights, that among these are life, liberty, and the pursuit of happiness. Yes, all through history, leaders have spoken of national unity, and they've warned that the real obstacle to moving the boundaries of freedom forward come from within. And that's absolutely true. And in fact, has been ever since the signing of the Declaration of Independence. For example, two of our greatest founding fathers, John Adams and Thomas Jefferson, who worked so closely together in Philadelphia for independence, they parted their ways not too long after the signing of the Declaration. You see, once a government was formed, once any government is formed, something called partisan politics begins, and it gets in the way. In fact, in their case, after a bitter and divisive campaign in which Jefferson defeated Adams for the presidency back in 1800, it was Adams that slipped away to Boston. Disappointed, brokenhearted, no question about it, but bitter. Yes, politics is divisive, but here's what I know. The things that unite us, the things that unite you and I, America's past, of which we're so proud, our hopes and our aspirations for the future of this great country, folks, these things far outweigh what little divides us. This weekend is a time to remember that we are one nation under God. One nation under God. We are one nation indivisible. And regardless of politics, we're all Americans. And as Americans, we pledge ourselves to each other and to the cause of human freedom. Not just ours, but the world as well. So from all of us here at Tiger Financial News Network at TFNN, we wish you and your family a happy 4th of July. I say, let the fireworks begin. It is Independence Day. This is TFNN. I'm Steve Rhodes, and welcome to the show. Right now, we've got Dow futures up 43 points. They're trading out at 16,942. S&P futures up 5 points. They're trading at 1972. NASDAQ up 12 points, up 0.3%. It's trading out at 39.02. King dollar up 340 ticks, up 34 cents, trading out at $80.32. Goldilocks back $13 right now. She's trading out at 13.17. Silver off about 1% as well, down 20 cents, trading out at 21.09. Light sweet crude off 40 pennies, trading out at 104.09. Our call number is 877-927-6648. Give us a call, folks. Happy to take a look at your stock, answer whatever question I can. A quick peek across the globe. We'll see the DAX. They're having a party out there. Up 83 points right now, up 0.8%. It's traded at 99.94. No change by the ECB to interest rates or anything out there. The FTSE up 46 points. That's up 0.7%. That's traded out at 68.62 in Asia last night. Mixed bag out here. You had the Shanghai up 4 points. That's up 0.2%. Down 2.10. Well, not even 0.2%. Down 0.14 was the Nikkei off 21 points. The Hang Seng down 18. So, well, we have a lot to look at here today. Let's go. Where do we want to begin? Let's go take a look at the futures market. Let's take a look at each of the daily time frames out here. If you're watching us on TigerTV, thanks so much for doing so. If you're listening on the radio or your mobile device at TFNN.mobi, we absolutely appreciate that. Remember, you can catch the live stream of this show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphones on it. Click on that smartphone device. The show will stream live, and you'll be looking at 4 different quadrants, 4 charts here. The upper left-hand corner happens to be the ES-Mini, the S&P futures. The upper right-hand corner, the Dow futures. Lower left-hand corner, the NASDAQ futures. Bottom right-hand corner is the Russell 2000. I can tell you, from a daily perspective, all still, even with the release of great jobs numbers out there, all charts are in full bullish mode out here. Now, what are we going to use for full bullish mode as a definition? Let's take a look at our daily chart out here for the ES-Mini. Let's begin here. Number 1, we're going to take a look at these market profiles. A tool provided to us by the folks at TAS. In fact, each morning at 8 o'clock, there is a video that you can get access to on the homepage of TFNN.com. Helps you to understand what's going on inside of whatever market John Logan decides to go ahead and cover for you. If we just take a look at the ES-Mini here right now, we're going to take, I'm going to pull this back just a tad here, just so you can get a feel for how these market profiles work. Coming off of the lows back here in the trading session of February 2003, what you saw price actually do, once it broke through the level right here in the trading session of February 11th, it got above its unfair high, its resistance level. Once it got above that, we've never seen the ES-Mini. Well, I guess I take that back. We've seen the ES-Mini crack its unfair low or its support area just for about 3-4 short trading sessions back here in April. April 10th, April 11th, April 14th, and April 15th. And then, boom, it was on its way. And we have not seen those lower profiles broken here yet. What does that mean? That means that this is in full-out blown momentum mode to the upside. If you take a look at the A to B equals CD patterns, that's our lightning bolt pattern out here. We'll come off of those lows out here back in the February 5th time frame. We'll make that our A point. Our B point for the first A to B equals C to the upside is going to be March 7th. And our C point is going to be the low that came in on April the 14th. You'll see that price is above the 1-to-1 A to B equals C. That price projection, 1958.75. You can see that price got up to that level. It actually hit that level. That was on the trading session of June 23rd. And what price also was doing at that stage after making that 1-to-1 A to B equals C, it was inside what? The top of its market profile, the top of its resistance area. So it had 2 forms of resistance. Once it broke out of that level, that was on the trading session of July 1st out here, broke out, and that says, okay, I'm going to go to the next floor. Well, what's the next floor? Well, that's the 1.272 expansion of the A to B equals CD leg. That takes you up to the 2001 price point. Not until we see the ES Mini slip back below its current market profile. There could be a new one that forms, but right now, let's go with what we have. And that current market profile says 1954.75. Should our expectation be anything other than price moving up to that next level out there? That is what the S&P futures are doing. If we go take a look at the Dow futures out here, we take a look at the Dow futures. Let me go ahead and pull this back here. Let's go ahead and delete one of my retracement, see if I can delete that. There we go. We'll clean up the screen here. Same real charting type pattern out here. You can see that right now, currently, you've got the Dow futures up above their resistance area. They closed just slightly above it yesterday. That price, by the way, 16,889. So long as price stays above that, that says that it wants higher price. Now let's go identify, using our A to B equals CD tool, some price projections of where this is likely headed to. Our A point going to be the same thing. We're coming down to February 5th. That'll be our A point out here. Now our B point I'm going to go ahead and use in this case. I'm going to use the April 4th high. Why am I doing that? Well, if you take a look at the high out here on March the 7th, you can see that there was a higher high that took place on April 4th, and there was a lower low that took place on April 14th. That lower low, what I mean by that, taking out the swing point here from March 18th. And when you're using an A to B equals CD tool, don't be afraid to redraw the pattern. You're always utilizing the data that's available to you. When new data provides itself to you, go out there and change the chart. So in this case here, my B point's April 4th. My C point is the low out here on April 14th. Now, the Dow futures, they say they want to take us up into the 17,174 range out here. So long as the Dow futures are able to hold above their market profile resistance, 16,889, they offer the promise of moving up and completing that 1-to-1 A to B equals CD in the 17,174 level. So at this moment, all signs point to bullishness, full speed ahead. Hey, I hear some beautiful music in the background by one of my good friends and great recording artist, Earl Clue out there. He's going to take us into this breakout here. We get back. We'll go check out the NASDAQ futures and the Russell 2000 as well. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures up 45, S&P up 5. Let's get back to our daily contracts out here, our futures contracts. Let's take a look at the Russell 2000. Russell 2000 right now trading out at about 12:01. I say about because I've got a little 10-minute delay out here. Don't want to pay for the live data feed out here. And if we take a look at what the Russell 2000 has done, is doing right now, it's number one, it's trading into resistance of a swing point out here. It needs to clear the swing point high from March the 7th. That level is 1203.70. I think 1203.70. Yeah, 1203.70. That is the swing point high. I'll draw a line across the screen out here. Let's do that. You'll see here at 1203.70. You'll see the last couple of trading sessions here. Oops, I mean to delete. Delete that one. There we go. Okay. Now, if we take a look at the last three trading sessions, notice how this area here, it's a normal area. It's a natural area. In fact, you always want to take a look at swing points when you're looking at price projections of any equity, something that you trade. Your eyes want to go to both volume, bars. You want to take a look at volume. No question about it. In fact, if price is moving higher, you want to see a high volume high out there, and you just don't want to see volume off of those highs, meaning that sellers couldn't wait to get out of the gates once price got up to that level. You want to see price pull back on light volume out there. High volume high really offers and increases the likelihood that price will travel back up there. But once it gets up there, it does what's called, it makes a 100% move of a move. What do you mean? Well, the initial move was at the high back here inside the Russell 2000, back on that March 7th date. Went ahead and made a move down to a low out here back on May 15th. When it was making that low on May 15th, it also was making a move of a move, a 100% move of a move. What do I mean? Came back to its swing point low. That swing point low was on February 5th. So really a consolidation in one sense or another. Certainly a consolidation at the lows out here. If, in fact, that price doesn't bust out of this area that we're in right here, it offers the potential of either a retracement from the May 15th level to the high so far that was put in that spike on July 1st, or move all the way back down to the low. Right now, the market profiles say, hey, you're in full bullish mode out there. However, being in full bullish mode on anything always means that you go ahead and you take a look at, well, where's price likely to go to and target and where it's going to deal with. And that's at that 1203.70 area. So if it can get above that, then that offers a promise for higher price. You might say, hey, where would that take us to? Well, if we use our A to B equals CD pattern out here, my A point is going to be the May 15th low. The B point out here I'm going to use is going to be the high on May 28th. C point retracement down into June 3rd. It's already done the 1 to 1.272. I would have have to say the next level is 1217. That's your 1 to 1.618. A to B equals CD to the upside. Of course, it's all about this guy right here, the old NQ, the NASDAQ. It is in the extreme overbought condition. It's 14-period RSI right now, reading out at 83.41. However, this was consolidating in a consolidation range that takes us back into November of 2013. It broke out of that consolidation range out there, and that offers for us a higher price. How do I measure this one easily? Well, it's about let's see, I should have it memorized. I think it's a 400-point move. The high is 3,700. The low is about 3,400. Yeah, so a 300-point move. So that says 4,000 is the number that it wants to reach. It's right now traveling out at 3,903, unless we see some kind of reversal inside this area. And we will at some point in time. The rubber band just can. Do you know how you stretch a rubber band and you stretch it the first time and it's okay, and then maybe you let it go for a while and you come back and you stretch it and finally it snaps? Well, this thing is going to snap. Now, the snap could just be a retracement, a move sideways or something to work off of an overbought condition out there. Let's go take a look at what's going on inside the U.S. dollar index. I mentioned that was up 300 right now, 355 ticks out here. It's up 35 cents, trading out at $80.34. We take a look at this stock chart. We take a look at what the U.S. dollar index is doing, moving higher, no question. And if you take a look, we're looking at a trend line here. If you're watching this on Tiger TV, it's a trend line that I'm taking off of the high out here from January 21st. I'm using that, in essence, as a touch point. I'm using as my next touch point back here on April the 4th. That was out at $80.77. Interestingly enough, the U.S. dollar index broke out of that trend. It did that on May 23rd. As it was doing that, if we go from the swing point high down to the low out here, it made a 0.786 retracement. Not to the T, but pretty darn close to the T. 80.97 was the actual 0.786 retracement. It actually got up to a high of 81.07. Now, that candle session, when it made that retracement level, you'll see that was a key reversal session. That key reversal session says the U.S. dollar index has resistance now at that level of 81.07. Key reversal session did what? Turn the U.S. dollar index back down. Where did it take it to? Where it naturally should have taken it to. The trend line that it broke out of. It tested that. It tested it on June 30th. Slightly closing below it. Broke back out of it 2 days later on July 2nd. Looks like that is a successful trend and says the U.S. dollar index may, in fact, be trying to make an A to B equals CD to the upside out here. When we get back, let's go see how this market's going to pop. The question is it going to drop? We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. We got the Dow up 53 points, trading at 17,029. S&P up 6 at 1981. NASDAQ Composite up 15. Russell 2000 up 6 points, down 0.5%. Hey, what's going on there? Must not be a updated feed. Yeah, I think it's delayed for some reason on my chart out here. NDX up 10 points. New York Stock Exchange up 32. Lead the charge the upside. PetSmart up 14% this morning, up $8 and change. Netflix up $4, up about 1%. Cummins Inc. CMI up 374, 2.5%. PACCAR PCAR up 5%. CRE CREE is the ticker symbol, up about 5% as well. Lululemon up 5%, up $2. To the downside, Rigato Bioscience, it's off 55% out there. A big haircut, down 376. I guess the DSMB, that stands for the Data Safety Monitoring Board, has initiated an unplanned review of data regarding a drug trial out there. Not necessarily the type of news that shareholders wanted to hear this morning. Let's go out to Nashua to our man Lou. Lou, happy 4th of July to you. How are you today? Uh-oh. Do we have Lou?
Hello.
Hey, Lou, how are you today?
Fine, how are you?
Excellent. Thanks for asking. You're interested in the euro. Are you a buyer? Are you a seller? Tell me what you're doing.
I was thinking of going short. But,
thinking of going short. Okay, so let's take a look at the euro out here. I'm going to put two charts on my screen for you to consider when we take a look at the euro. So right now, trade out at 136.07. And the euro here, Lou, has been trading in a sideways consolidation ever since about November 25th, so right after Thanksgiving. And the bottom of that consolidation, so if you're taking a look at shorting the euro and you're going to do a risk-reward analysis, I would tell you that pretty good chance that the euro would find a bottom somewhere in the 134.78-ish type range out there. So that is your, I would have to say at this stage, that's your potential reward. Now, if it breaks that consolidation, you're looking at a much larger move to the downside, because the great thing about consolidation patterns is that when they're broken either to the upside or to the downside, what they really offer is the promise of a measured move equal to or greater than that consolidation. So a break of that area might be another way to consider playing it, because if it breaks through those lows, that says you're looking at about $1.29 out there for the euro. Likewise, the same type of move, same type of measured move to the upside, but you're not necessarily looking for that. I will also tell you that potentially a better place to short from is a trend line that takes you all the way back to 2008. On my screen here, it's a black trend line, and if you were to ask me where that might be, it's all based on time and where it would hit, but it's probably around the 136 level. So that's what this one set of tools that we're looking at would say to you. If we take a look at the daily profiles here of the Euro futures contract, I'll put the daily chart up on my screen. This is really confirming for you that selling short the euro would make sense out here because it has broken to the downside. It's broken its support levels. It began doing that back on May 13th out here. But as I say, you may be a little too late in that move to the downside here. It shows as market profile that it's got support right now today at 1.3590. So, those are the parameters out here. It's also, I say, it's really got strong support down here at that 135-ish range, which really ties into that consolidation that we're looking at. So from a shorting standpoint, you're better off shorting, in my opinion at this stage, you're probably better off shorting some type of retracement up to the current off of what is the current high on the daily chart, which is the May 8th level. And if I go down to the low that was put in here, that was on June the 5th. And if I take a look at that, it says that retracement maybe to the 138.06 level might be the better spot to retrace from. Now that's on the futures contract out there. So do those parameters maybe assist you? You've got to do the reward to risk analysis there, whether or not it makes sense from where you're at right now to the bottom of that consolidation.
Right. That sounds perfect.
Yeah. So I'd wait to, you'd like to sell some other type of retracement higher, in my opinion, and try to get a better reward to risk trade out there.
Right. I see that. I appreciate that. Have a nice Fourth.
You bet you. That was Lou in Nashua. That was taking a look at the euro. In this case here, we took a look at the actual currency pair as well as the futures contract out there, just to try to put in place. And, if we take a look at the futures contract, we take a look at these market profiles as an example out here, what you're going to see is that, and what you like to see, whether you're going long or short, is you like to see either the resistance, in this case here, from Lou's looking to go short. You're looking for it to start breaking the support levels. That's the green horizontal bar going across the screen. And then once you see that, you like to continue to see those support levels get broken, but you don't want to see price close really above the resistance area. We did see the euro close slightly above it on June 30th, but got back below it here yesterday. And it really suggests to me more likely that Lou is right on the trade, right on the thought on the trade, and that the euro probably does want to get back and test the bottom of that consolidation level out there. I would say if you were going to take that trade, or anyone's going to take that trade, the area of where your stop needs to be is above a trend line. What you can do is you can go back and take a look at it might be easier for you to just take a look at the weekly trend line out here. And that trend line that I'm referring to is coming back to the highs in July 18th, 2008, using that top of that trend, the top of that candle, I should say, the top of the candle from May 6th as well. That price at 1.4938 out there. And I would use a close above that as being wrong on the trade, because then you're likely to see the euro probably move up to maybe even the most recent highs back here again at 1.3922 out there. That was on the euro U.S. dollar. Let's go take a look at. We covered the futures out here. I knew I could get it out. Let's go take a look at some things that are popping and dropping in the marketplace. Take a look at today's movers. PetSmart, PETM, is the ticker symbol, up a nice 13% out here. I don't see any real news on what's going on out here. Searching on reports of possible sale. Well, I take that back. There is some news out here. Let's see here. Doesn't give me any more information there than some rumor out there that Jana Partners disclosed a 9.9% stake in PetSmart. PetSmart out here, and reportedly may push for a sale. They're going to try to push for a sale of the company. Sounds like a Carl Icahn kind of a move out here. If we take a look at PetSmart, boy, this thing had some real volume, had some real problems back here on May 21st. Big volume to the downside out here, had volume of 13 million shares, but boy, it's taken that out to the upside so far this morning in what is only the first 12 minutes of trading with 3.8 million shares out here. PetSmart's got a number of gaps to the downside. Well, I'm taking a look at where it's trading, in essence, into right now, which is January 6, 2014. Has not made it all the way back there. And as far as gaps, this was a third gap, may have even been a three-gap play. How about that? The first gap, in taking a look at PetSmart off of the highs, that first gap was a very small one. Took place on the trading session of October the 8th to the October 9th session. You can see very small. And what I mean by that, what a gap is, if you take a look at the low, the very low of that trading session on October 8th, the very low was 73.83. The very next session, the high out there was 73.46. So you have a little 43 cent gap out there. Then you've got another one, a larger one out here. Well, actually, it's got more than three gaps. This thing's got plenty of gaps to the downside. I don't know how you really qualify this one as a three-gap play, because I see another one now right here on January 6th. I see another one here on January 15th. These are all gaps to the downside, so I don't know what to tell you about PetSmart out here, but it has more problems to the downside than it does to the upside out here. If we put this on a weekly chart, let's go see what the weekly chart shows us inside of PetSmart. Maybe this gives us a little bit different picture, maybe a little bit better picture, better view out here. I'd say PetSmart is going to run into trouble. At least it has here at that January 6th high, right around $70.53. Right now, trading at $67.76. PETM is the ticker symbol. Let's take a look at this bioscience company, RGDO, 57% haircut here this morning. Let's put this back to a day. Well, let's put this on the weekly chart as long as we're here. That does not look good. This doesn't show anybody in the profit picture inside of this stock chart. Woof. That'll get the sphincter muscle tightening up pretty good out here. Not a single person, it looks like, in a profit position inside of this stock chart. If all that, yeah, how about that? This thing looks like it may have been an IPO back in August of 2013. So, toast. No reason to spend any more time on that stock chart out there. That was the ticker symbol RGDO out there. Not a good-looking stock chart. To the downside, NQ Mobile getting hammered, getting squashed this morning, down 30% out here. Looks like they've got some changes to their board, and no matter what, this thing is trading to the downside. It's got some volume behind the move so far today on what is going to be a light volume trading session. So looks like all the volume is going to be out of this market here within the next hour or so, with the markets closing, the cash markets closing at 1 o'clock today. Out here, the index futures market's closing at, I believe, 115, and then the commodities, I think, they're a normal close today, right around the 515-ish type range out here. Nonetheless, right now you've got NQ is a ticker symbol. That's NQ Mobile, down at a price level of 470. Volume behind the move, 8 million shares out here. Its most recent swing point only had 8 million shares, so not a good scene out here. Let's pull this back further. No, this does not look good. Let's put this on a weekly basis. This looks as bad as, I got to get some water. Excuse me. This looks as bad as that bioscience. Well, not totally as bad. There's still a couple of people, if they're holding on from the trading session in October of 2011, October 3rd, 2011. But, boy, its swing point low out there is at a price level of $3.46. It's trading in there right now. Looks like, or trying to get into that trading session. Looks like that is where it is headed to. Not a good scene there for NQ Mobile either. Let's look at Cummins Inc. CMI is the ticker symbol. Excuse me. That is up about 2%, a little over 2%, up $3.60 out here It just formed a new market profile today. However, it's up above the market profile that began back here on March the 10th. So this still looks bullish to me. A little bit of resistance at most recent swing point, June the 9th. That's a weekly basis that we're on here. New market profile on the weekly basis out here. Weekly chart, I can tell you, still looks very bullish to me. Let's pull this back on a daily time frame, get a better feel for what it's doing here on the daily time frame. Okay, so I take that. So this is now fighting for its life on a daily. Again, weekly chart still looks good. Daily chart wants to get above its unfair low. It's a support level here. That takes us back in about the 157.17 area, 157.50 right now. I just found some natural resistance. Let's take a look at any kind of volumes out here. Still a nice-looking trend inside of Cummins Inc. CMI. It's broken the unfair low. First time really off of the move up from February. There was one day where it broke below it on March 14th, but immediately got back inside its trend out there. So this does not look too bad. We haven't seen substantial volume or anything like that to the downside out here. So it just looks like at this stage, just maybe a normal retracement that ought to find support. This thing broke out on the trading session of April 29th. So the real buy on Cummins Inc. would be a pullback and a retracement into that sign of strength out there, anywhere between a price level of 142.86 to the 151.80 area, and that's where, as long as it's coming back on light volume, that's its most recent sign of strength out there. So not too bad on Cummins Inc. CMI is the ticker symbol. Let's take a look at what do we want to look at? Let me see, percentage-wise, what do we have moving out here? PetSmart, Netflix, PACCAR, PCAR. Let's go take a look at this equity here, trading at $67 and change of 5%, up $3.35, gapping up this morning. Has some decent volume so far. Right now, 964,000 shares. Let's see, what is it trading into? It's had a little sign of weakness right here. Broke down, so it's trading right back into the area where it broke down. The breakdown took place, the beginning of it was April 28th, so that high may be resistance out here at 66.78. Let's put a line across. It's above that area here right now, so that's good. Let me put a line across there so we can have that. That marks the spot. 66.78, so we can see it's trading above that area. You can see the volume down here. I can put a line on that as well. The volume bar that I'm discussing or dealing with right here, that's got 3.9 million shares, 4.1 million shares. Looks like I didn't. There we go. It looks like I didn't really hit the mark out there, but close, just no cigars. So somewhere right around 4 million shares out there. That's we'll see if it is unable to close today. I can get it out of my mouth here. If it's unable to close above 66.78, that would be more expected. I don't know that it'll have the type of volume today, 4.2 million shares by the 1 o'clock close. It could. Already done 992 out here. If it can close above that level, that's going to send off a message it wants to move back to the March 25th area, right around 68.81. Right now, Dow's up 64, S&P's up 5. Be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Welcome back. This is the July 4th edition of the Trader's Edge show. Right now, the Dow is up 68 points. The S&P is up 560. The Russell 2000, I don't have a good read on that. I don't know why I'm not getting the feed there, but the composite up $8. I know the Russell 2000 is up because the IWM is up. In fact, let's go take a look at gold. Right now is up, is down $11. Silver's off 18 cents. Light sweet crude is off 62 cents. Let's go take a look at light sweet crude here. Right now, we're going to go ahead and we'll put up the market profile chart. We'll take a look at the daily time frame out here. We see light sweet crude is got some support right around the 103.48 level. A break of that, a break of this little rising trend line out here, that would suggest that we are seeing a real change in trend in place. Right now, you know, we've seen a move off of the highs out here, but we have not really seen it break its trend out here. And that would be a close, probably somewhere close. Let's just call it 103. Any close below 103 would suggest that the trend inside of black gold Texas tea would be changing out there. If we take a look at Goldilocks, let's go see what gold is doing. It's off $12 right now, off of its session lows. We saw gold trade down into, let me go ahead and delete this out here. We take a look at the daily chart for gold. We're taking a look at its market profile as well. Has not broken through the support area coming off of the lows. That's the green line that formed back here in June 6th, June 5th out here. What gold did this morning was it came down and it really tested its largest congestion area of buyers and sellers, referred to as the point of control. That's at a price level of $13.12.90. What you saw Goldilocks do is get down, tag the 8-period exponential moving average out. That's the 13 period. I take that back. That was out at a price point of about $13.10. It actually got down to a low of $13.09.40. Got down in that point of control area. Not really a bullish breakout either, so not a bearish. It's just kind of neutral on a daily chart as we take a look at it. In order to get bullish, which it did yesterday, not a good scene when you break through a resistance area and you give it up on the very next trading session out there. So it just says just time to pause and reflect. And if you're long, just make sure you got stops in, and not necessarily a reason to get short here just yet. That reason would come with a break below 12.99.20 out there. We have not seen that. Again, 13.26.60 is the market profile resistance level. It would do gold a whole lot of good to close back above that level today as it did yesterday. So trading session is not over. We'll take a peek at it again on Monday when we get back to the markets out here. Lastly, we still have a minute here. Let's go take a look at the VIX index. Let's go see what is going on there. VIX index here, gapping down just a bit this morning. Right now, trading out at 1064. No real danger shown here in the VIX. And, of course, as we all know here at TFNN, the real danger inside the VIX comes when it gets above the 50-day exponential moving average. That price point right now is $12.10. It's trading at 1064. Can't imagine there's anything that will take place to get that type of fireworks going. But if, in fact, when we do see a move above the 50-day exponential moving average, that'll tell you that you've got a deeper retracement or any kind of retracement that would be taking place inside of the markets, but that is not to be seen as of yet. One final check on our liquidity gauges out here, and that's going to be the Euro-Japanese yen. Euro-Japanese yen having made a small 0.618 Gartley sell pattern, but that is in jeopardy. If we take a look at the daily chart, in jeopardy of failing here, that means price would move higher up into the 0.786 area. That would be some additional fuel in the markets. Folks, it is the July 4th weekend. Thanks so much for spending your time here with us at TFNN. We appreciate it very, very much. Have a safe and happy holiday. We look forward to seeing you real soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.